Welcome to Friday's Targets in Focus. I'm Elaine Stenson. The Bank of Japan is expected to maintain its monthly 7 trillion yen purchasing of Japanese government bonds beyond its target of 2 years in order to kickstart inflation in the economy. Eric Lascelles, chief economist with RBC Global Asset Management in Toronto, joins me on the line now to look at the yen forecasts. Eric, the Japanese yen is trading at its lowest level in 5 years against the dollar. With all of this in mind, what are your 1, 3 and 12-month forecasts for the dollar-yen pair?
We think this yen can continue to soften, and so we look for the recent move to be sustained and ultimately reach a level of about 108 yen to the dollar. And the basic motivation for that is we suspect the Bank of Japan will determine additional stimulus is needed that will be viewed as inflationary, and in the end it should push that yen somewhat weaker. And I think it's worth acknowledging on the other side of that cross that the US dollar, we suspect, is in for some extra structural strength, having made a shift in 2011 and now starting to behave really as a normal currency that goes up when a domestic country strengthens. And so with a stronger US dollar and some weakness on the yen side because of monetary stimulus, we do think there's some further distance left to run in that exchange rate.
Okay, and moving on to the euro, and with the euro pairs weakening gradually overnight, this helped the euro-yen to climb to multi-year highs. What are your 12-month forecasts for the euro-yen pair?
We're looking for a stronger yen versus the euro. We're targeting 130 in a year's time. And the basic logic here is that you have competing forces. On the one hand, in general, we do think the yen can soften versus the likes of the dollar. But relative to the euro, that may not happen just because the euro is quite overvalued in our estimation. We still think there's room for additional stimulus from the European Central Bank. We suspect Eurozone growth, while it should be positive, will perhaps end up disappointing. And so this is more a story of the euro materially weakening and simply resulting inadvertently in a slightly stronger yen on that exchange rate.
And finally, on Friday, the pound softened slightly against the yen and most other peers as speculation grows that gains which saw the UK currency reach multi-year highs against a number of peers were excessive. What are your forecasts for the pound-yen pair?
We're looking for the pound yen to move to about 162 in a year's time, and so that does point to the potential for a stronger yen against the pound. And certainly this is one of the trickier crosses to predict because there's no doubt that the pound has been quite strong recently. Equally, we don't particularly doubt that the British economy can continue to move higher, so you think that would argue for a weaker yen, but in the end we suspect that may not quite hold together, in large part because we are convinced that the British inflation story is not quite over yet. Inflation rates are likely to remain at least a little bit too high, and that will, if nothing else, contribute to a weaker pound. And it's important to recognize as well, we've seen quite a substantial deviation in recent months on that exchange rate, and we just don't think that can stick. So a lot of this is a reversion to the mean for the pound, and in the end, the yen may find itself a little bit stronger.
Eric, thank you very much for joining me on the line today, and that's all from me this week. But I will be back with more Targets in Focus, looking at the US dollar crosses on Monday. Until then, bye for now and have a great weekend.